Good afternoon, everyone, and thanks so much for joining us today for Understanding Your Money, Anatomy of a Loan Request. I'm Rebecca Chauncey, a business advisor here at the Illinois Small Business Development Center, or SBDC, at Bill Bronzeville. Today's session is brought to you at no cost because it's funded in part through a cooperative agreement with the United States Small Business Administration, or the USSBA, the Illinois Department of Commerce and Economic Opportunity, and the Urban Juncture Foundation. Just a quick housekeeping note. If you have questions today, please type them in the Q&A section, which you'll see at the bottom of your screen. So if you hover over the bottom of your screen with your mouse, you'll see that. Please type your questions there and we will address them if relevant in the moment. And there will also be time for questions and answers at the end of today's training. And so without further ado, I am so happy to introduce you to today's presenter. Our presenter is the Director of Small Business for Bill Bronzeville and the Illinois SBDC at Bill Bronzeville, Shawana Tyus. And I will let her share more of her background and show you how the anatomy of a loan request works. Thank you, Shawana. Take it away.
Thanks so much, Rebecca. Good afternoon to everyone. So glad to be here. Glad to be a part of the Bill Bronzeville team. And it is my distinct pleasure to share with you a little bit about kind of what the process is when you are in pursuit of loan funding, and kind of what to look out for, what to be mindful of as you're speaking with lenders and other funding sources. To tell you a little bit about myself really quickly, my background is largely in banking, and I've had the pleasure of being the person who gets out into the marketplace and helps businesses of all kinds, small and large, find a way to meet their capital needs. And so I think that allows me to bring a unique perspective to what the lender is looking for. And I'm certainly glad to share that knowledge with you on today. As Rebecca mentioned, we'll certainly give folks an opportunity to ask questions and the like. Today's session will be general in the sense that we understand that there are, many representatives, industries represented on the call, and distinct and varying needs on the call. So today's session will be from the perspective of helping you understand really some of the considerations that a lender has to make, and how you might mitigate some of those as you proceed in seeking capital. So we'll start, and we'll just kind of do just a smidge of an icebreaker here, if that's okay with everyone. Not putting anybody on the spot, but if you could humor us and use your Q&A section there, we'll use it as an A and not a Q to start. But we'll start with my question. My Q is, what is the most important word in a loan request? So if you could indulge us, and just kind of curious what your thoughts are. And again, respectfully, we realize that some of us may be more versed than others in the topic. If you are, wonderful, we welcome your insights. If you are not, that's okay too. Just whatever comes to you off the top of your head. We'd love to know what you think the most important word is in a loan request. Okay. So we'll just keep right along talking about this topic in advance here to give you some considerations. We all know that when you're talking about lending, there are things that a lender is looking at that kind of drives his assessment of your business needs. So these things are really driven in that conversation, in that whole process. You'll hear the C's of credit, ad nauseum, depending on what circles you find yourself in. So for those that don't have an idea, if you could maybe take a look at one of those and tell me which one you think is the most important word in this process, in the loan application process. I'll give you just a second to think about that. All of those are important words.
So do you see the word, Shawana, or I can
Yeah,
tell
I'm
you?
trying not
Oh,
to click back and forth, but yes,
okay,
I do
that's
see the
okay.
word. Thank you to that participant. I won't call
Collateral
you out. We
spread.
won't put you
Mhm.
on the spot. Yeah. What was that, Rebecca?
It you see it's collateral.
Yes.
Okay,
Yeah.
all
Thank you
right,
for confirming.
right.
Okay. So again, based on my experience, let me just tell you what I found the most important word to be. And that word is repayment. That is the most important word when you're talking about a loan request. And I'll just kind of give everybody just a high level idea of why that's the most important word. As you all know, when you're talking about a lending source, and there are funding sources of all kinds, but we'll stay focused on the lending source. When you're talking about a lending source, and particularly a bank, that bank, typically in a traditional bank, is taking the money of its depositors and making it available to folks with needs, lending needs by reason of a loan. It is of utmost importance that that bank applies very sound lending practices and credit policy and underwriting guidelines to ensure that that money comes back. Because if a bank is unable to substantiate, why they took a particular risk or why they extended a loan size of a particular amount or why they decided to lend within a particular industry, they lose credibility very quickly. And so the idea is that they are making informed and smart decisions around whether or not they want to entertain you, your business, as a potential borrower. And so because of that, because we're showing up as business owners at someone else's door, essentially, I'll use that illustration, and we're asking for someone to partner with us, to take a chance on us, that is essentially inviting the lender to say, okay, well, it's time for us to establish how we're going to assess whether or not that person will indeed get that money back to us. So what you are inviting is an opportunity for the bank, I'll use a strong word, to scrutinize your operations inside out, upside down, and sideways. And so whereas from your side as as the potential borrower and as the business owner, you have a completely different set of considerations. You have a completely different set of motivations than the banker does, and that's kind of what we want to talk about. We want to call out what those distinctions are. So not so much that we're working to change how the lender sees things, right? But more importantly, we're looking to be prepared for that conversation. In banking, there's a concept called mitigating factors. Okay, so this business owner has just started out in business. What is it about, or they've been in business only a few years? What is it about that number of years in operation that I can mitigate? What can I kind of counter that fact with to convince the folks that I have to convince as a lender, as the person who's trying to make this appeal to the bank on your behalf? How can I make that appeal and put our borrower, our potential borrower, in the strongest light possible? So let's talk about how a small business owner sees things and how the lender sees things. If you'll notice, the business owner on the left hand side, they have their shades on. They're ready for the world. They're ready to launch that dream. They're ready to get out there and make it happen. But the lender has the magnifying glass. He's closely, very closely scrutinizing what it is that you are proposing to bring into the marketplace. So let's take an illustration really quickly. One of the things we talked about in our invitation to you is we wanted to talk about kind of the ways in which the lender processes your proposal, your request. On the left-hand side is the business owner. So what does the business owner see? The business owner comes in and they have their bragging rights about a multi-year contract, a big multi-year contract that they have with a Fortune 500 company. And that contract is going to make up 50% of their annual revenue. They're quite excited about it. They've worked on it for a long time. They've put a lot of hours in to get that contract. There were other competitors who did not get it. And so again, they're thumping, the chest just a little bit. They're very proud of what they've accomplished, and rightfully so. However, if you look to the right-hand side, the lender is saying, well, I don't see what you see. What the lender may see is concentration risk. And what that term refers to is the notion that you're almost too dependent on a single revenue source. As wonderful as this contract may be, the lender says, what happens if something goes sideways with that contract? What happens if that part of their revenue goes away? I think you would agree that most companies would not survive losing 50% of their annual revenue. It's just not common at all, if at all, the reality of how someone would survive that kind of we'll call it a hiccup, right? The other thing the lender might see is, wow, this they don't really have a lot of diversity in their revenue streams. One of the ideas, one of the notions is that the more revenue streams you have, the less of a hit you would take if you lose one of those revenue streams, right? And so let me add that, and we'll talk about this a little bit farther down in the deck. But the other thing that I would challenge you to consider as a business owner is that the lender is put in this unique position to help a small business, to help them get the lending that they need, the capital that they need, I should say, while at the same time juggling these other requirements that are put on them within their own organization. So what does that mean? What does that look like? And I'm sure I'm not telling you anything necessarily new, but let's have the conversation. When you're a lender, you have a few different balls that you're kind of keeping in the air at the same time. One reality is that a loan officer is going out into the marketplace to find the best opportunity possible, right? And so what that will mean is they're looking for the strongest candidate, the strongest loan proposal, because that then has a domino effect, if you will, on a lot of things. It impacts their credibility as a lender, their ability to assess and secure strong deals, their ability to understand which relationships to pursue because of their degree of readiness and which ones not to consider. And so really, when you're making a loan request as a small business owner, you're asking your lender to stand up for you in a sense, right? Depending on the loan size, not only is that lender involved, but there could be a loan committee involved. That loan committee has to be convinced that even though we'll call it Acme Boxes for now. That'll be our our company that we use in our illustrations today. If Acme Box Company has this big contract, how can I give the lender enough to go on where that's not held against me, or it's not too big of a strike against me? So consider that. I don't have to tell you, loan officers are sometimes, depending on the institution, they're motivated by commissions and things like that. So you're taking all of that into consideration because you want to be the best, the strongest candidate possible. Let's talk a little bit more about those difference in perspectives, okay? Next, we're going to talk about your plans for growth. Acme Boxes for growth, plans for growth. And so what Acme Boxes sees is, oh, we're going to give these aggressive projections because we anticipate, really significant growth in the next few years, and we're going to achieve that by rolling out, multiple new products over that period of time, which again is admirable. It's a wonderful goal to have. It's something to aspire to. It's something to strive for. But what does the lender see? Again, the lender has on their critical hat. The lender has on their, I can't afford to lose any capital in the kind of generically using that word. I can't afford to lose any standing with the people who I have to work with to get loans approved, to choose solid candidates so that, again, we get the repayment of the money that we've already lent out. So you're thinking, Acme Boxes is thinking aggressive plans. The lender is saying, oh my gosh, I'm anticipating this is going to be a strain on their operational capacity. Maybe there's something that lender is already aware of about how you operate your current location, the physical limitations of that location. They've already looked at your financials, so they understand, what your inventory capacity is right now, so on and so forth. They're also looking at the fact that you may not have really an awareness of what's going on in the market around you. Again, we're talking about arguments that could be made. The question is whether or not you, as the owner, Acme Boxes, can make a strong enough case with their lender to say, hey, let me tell you why this shouldn't be a concern. This shouldn't be an issue. So as a business owner, you're almost of the general assumption out of the gate that someone's going to pick apart your wonderful idea, your wonderful business, your wonderful team. And I'm using the phrase pick apart a little loosely in the sense, maybe a little uh, carelessly, some might even think, because it is that kind of a give and take, that kind of little tug that happens when a lender is put in the position where they have to defend a loan request. And so, what I want to assure you is that your loan officer is the storyteller. You will not be present when it's time to defend the loan request. Anything you're going to say about your business, about your plans, about your strategy, about your team, you need to have those conversations before it's time to approve your loan. Part of what happens too is I think some businesses, and we'll just say Acme Boxes might be missing an opportunity to engage with their lender. They might be missing an opportunity to engage and have the kind of conversations where their lender understands where they are at this point in time. No business has only ups. Every business has ups and downs, and Acme Boxes is no exception. I want to pause for a second because I'm very curious to know if anyone who's participating today has ever had a moment where they feel like, wow, I wish I had known X before I, started going out and looking for money. If you be willing to share a word or a phrase of something you wish you had known before you got in front of a loan officer, before you got in front of a potential investor, before you got in front of a CDFI, whomever the entity may be, before maybe you even got in front of a key team member. What my point there is, the same story for the most part, that you will tell to a bank is the same story that is going to compel other key folks that help you thrive as a business. This is going to be the same story that you tell to them. And I know storytelling isn't the first word you think of when you think of a business, but what we're also in search of here as we extend services and information and contacts to our small businesses, we're in search for the gaps. When you show up and you're present in front of these important decision makers, how can we help you close those gaps? So the money conversation is a big one. Everything you do is going to revolve pretty much around that one element. What is your funding? What is your opportunity to get additional funding? Sometimes, what is your ability to renegotiate terms? So, all of those things. If anyone is willing to share, you don't have to do it at this moment. We can open the line later as well. Or again, you can add it to the chat later. Don't want to put anybody on the spot. But understanding how you show up in front of those decision makers is of utmost importance. So let me just say this. I'll start with the second bullet on this slide, which says lead with the underwriting. And what that is just in reference to is you have to have the understanding that every decision made around lending is based upon a guideline somewhere out there. That bank has a credit policy. They have underwriting guidelines for your particular size loan request. They may even have a loan committee. And that's a lot of eyes, that's a lot of ears looking at your story, looking at the financial strength of your company, of Acme Boxes, right? And so Acme Boxes has to assume some of the responsibility of telling that story well. To that end, we'll jump to the first bullet. No two lenders are alike. A CDFI may look at you completely differently than a traditional lender. An investor or venture capitalist may look at you even differently than those two entities. So as you're in front of these decision makers and having these conversations, you're absolutely taking the right approach to ask them to give you a better understanding of what the guidelines are. That way, you're not just handing over your financials and hoping for the best. You're already kind of aware and anticipating, well, is this the right fit? Is this the right partner? Every lender you get in front of is not going to be a good fit for your business. Either they may not understand your industry, they don't have an expertise in your industry. In fact, at traditional banks, there truly does exist a list of industries that a bank will not touch. So your time is better spent getting in front of the people who you know are a match for your particular industry, your particular business needs, your particular stage of business development. And let me just go to the last bullet here on this slide then. Don't let your lender assume. When you understand that, and when you consider that there's so many people that are going to be looking at your story, it's up to you then to kind of lead with the knowledge of the underwriting, the knowledge of the guidelines. They may not give you, you know, every part of their policy, but any lender worth their salt should be able to tell you the things that could be prohibitive to your pursuit of a particular loan. They should be able to tell you the things that are advantageous for a particular loan, so on and so forth. And so don't let your lender assume. This is not necessarily common, but what I would recommend is that before your lender has to get in front of the decision maker, that you, as the borrower, as the potential borrower, as the applicant, have that conversation around, give me some initial feedback before you submit anything. Give me some, give me your initial feedback. This is your appeal to the lender, so that you can, if by some chance something kind of went, there was a misstep in how things were processed, or you thought you got them some information that maybe they didn't get, or whatever the case, somebody fat fingered an email address, whatever the case may be. You always want to understand what is being presented before it gets presented. One of the other ways that I think you can deepen your relationship with your loan officer is also to understand what obligations do they have. And let me touch on that topic again. Many times you'll find that sometimes exceptions are made, right? Or terms are adjusted when there is a full banking relationship. When there's a full banking relationship, I mean, you're not just coming to them for the loan. Maybe you already have a deposit account. We're talking about traditional banks, or you're willing to open an account with that lender. Maybe you're willing to entertain cash management services with the institution you're asking for money from. Maybe you're doing that with another bank right now, but you'll bring that service to them if they're willing to work with you. Everything, absolutely everything in the loan process is negotiable without exception. And so the stronger of a candidate that you are, the greater opportunity you will have to influence those terms. So that's just something else to bear in mind. What I would say is that it's important to know kind of how to get but to put your company, excuse me, in a position to really see a successful loan request, or I should say a successful loan request, and ultimately getting the money that you're requesting, right? And so I know this, we've already talked about this a little bit, but I do believe strongly in it, that when you have strong financials and you have a strong story, that is how you get to that success. And I will add that sometimes it's what the lender doesn't ask you that matters the most. So what does that mean? Let's talk about that one important word again, the most important word, repayment. And what you'll learn is that there is a lot of additional documentation sometimes that you can provide that won't be asked of you. Nobody will raise it. There's a lot of, how shall I say, churning, if you will, that happens in the loan process. I'll give you a quick story. For instance, a lender is not just managing your loan request, but it's very likely that that loan officer is managing a portfolio of existing loans. And so there's this certain degree, I guess, of chaos that happens in the lender's everyday life. And so that loan applicant who is better prepared, that loan applicant who respects their time, is likely to get a different experience than the person who does not. Let's talk about that first bullet, debt schedule. The debt schedule is essentially a borrower's way of saying, an applicant's way of saying, hey, by the way, I want to make sure you understand the terms of the debt that we have on our books. Because if you're going for a loan, we know without question that's going to change your debt schedule. And so again, it serves you better as an applicant to be able to say, here's what we know that debt schedule is going to look like before, and here's what we know it's going to look like after. You're taking some of the power into your own hands to influence how that story is told. And so every lender who's paying attention, they're going to also apply what's called sensitivity analysis. And that's their way of saying, well, wow, what if something changes in the marketplace? What is that going to look like for this particular borrower? If the real estate market, let's just assume there's a lot of activity for a given borrower in that space, because they're going to look at you globally, right? They're not just going to look at your business. They're going to look at you as a guarantor potentially, or your sponsor, your owners who have a greater than 20% ownership stake in the business, so on and so forth. There's a lot of people they're looking at, and a lot of things that are happening unbeknownst to you. So the more you know about that process, the better off you are. Let's look at the second bullet there on this page, which talks about changes in your assets and your revenues and your expenses that the financials don't tell. And I should add the word yet. So if there's something coming up that's favorable to your enterprise, favorable to how you're going to do business, I don't know, maybe you got a new piece of machinery, and that piece of machinery is going to allow you to turn around your products faster, to deliver your products faster, and by default change your cash cycle for that reason, how quickly you can generate revenue for your company. It could be anything. The point is there that it has to be brought to the attention of the person who's going to tell the story on your behalf. So your loan officer. It could be contracts. Getting to that third bullet there, it could be contracts. Maybe there's something that you have that's in the works. And let's say the bank or the lending institution is really kind of on the cuff. And let me back up by saying I should have started with this. You can do all of this and still get a no, right? But to be aware of the different angles that you can look at this from, and the potential for you to influence that discussion is super important. It really, really is. And so getting back to the potential for contracts, maybe you're the lender for Acme Boxes is they're on the line, whether or not they should prove a yes or a no. It could be a contract that makes all the difference in the world. This particular contract opens you up to, way more opportunities. Let's say, I don't know, 25% more revenue just on the basis of the relationships and the connections that this new contract may bring you. Ultimately, when you're asking for, I'll say, when you ask for some loans, it is you saying, we believe with a fair degree of certainty that we can say X is going to happen. So you have our financials, you know what we've done in the past 3 years, you've seen those trends, and that really is why that number three gets thrown around when you're talking about information that a bank tends to look at, is because three gives them the ability to establish a trend. If you talk about less than that, again, you get into that situation where they don't have as much to go on to consider how to structure a request that makes sense for you, but more importantly, makes sense for their risk appetite, right? So it might be contracts. Lastly, that last bullet, it could be a new team member. Maybe you have a strong bench because of who you've hired, because of the expertise they have in your particular industry, because of the things that they've already done, the things that that they believe that they can duplicate for your organization. So as much as some of these things don't really seem to be first of mind when it comes to the things that a lender would look for, because a lender is taking a comprehensive look at what it is that you are endeavoring to do, Again, when you take the power into your own hands to tell the story that you want to tell, you're in a much better position than if you had not. So when we talk about the topic of the anatomy of a loan request, it's so much bigger than even this one session would afford us. But at the same time, it allows us to think of new ways, think of even unconventional ways. To get our capital needs met through these partners that we have to reach out to. I'll end with another story really quickly. Um, the way that you position your company, your personal experiences, your personal assets, even sometimes, and your business assets, it kind of has no limits if you have the right audience. For example, in my previous roles, I have seen where people have taken music royalties and secured a loan with music royalties. I've seen a situation where at the height of the real estate market, there were even really like a conglomerate of folks who had decided they not only wanted to do business with the bank, but they wanted their friends to do business with the bank. Never underestimate the power of a referral. If you are a person who's well connected and you've in quotes been good to your loan officer in that way to drive traffic to them, I absolutely would leverage that where it can be leveraged. So I challenge you to think creatively of different ways that you can bring some other considerations to your loan officer that they might not have thought of on their own. Um, Another thing I'll tell you about that process, particularly the financial part of that process, is your lender. If the year is far enough along, they're going to want to look at your interim financials, not just your year-end financials, but your interim financials. And I can just tell you firsthand, interim financials can look all kinds of crazy because maybe something hasn't happened yet that's going to happen on the part of the revenue stream that you need to be able to point out, that you need to be able to emphasize. And you are your best advocate. You are the person who has the fullest scope of the story. Let me add this example as well. Sometimes for serial entrepreneurs, um, getting back to that, what do you see and what does the lender see? Some lenders see your ability to stand up a company more than once as a good thing. Some lenders might say, I don't think this person knows what they want to do. Sometimes it's being selective about which parts of your story to tell to the right audience, right? Sometimes some parts of your story won't matter for what you're trying to accomplish. And you kind of have to develop that, I'll use the word discernment to establish, what version of the story do I need to tell to a particular audience. And so, again, the hope is that we gave you just a little bit of something to consider. There's some other wonderful things we'd like to tell you about, but before we do, I just want to pause, Rebecca, and give folks an opportunity to engage with us.
Yes, thanks so much, Shawana. I hope that I would say it's fair to note the attendees have either been reminded of some things that they were aware of or found this very insightful so they can better prepare themselves for loan request or any other funding sources that you want to just be mindful of, because some of the themes and topics that Shawana addressed are definitely going to be relevant for that. If you, I know that we don't have any questions in the Q&A section now. If you are in a position where it's easier for you to speak aloud, please raise your hand and I will give you permission to speak or say your question aloud before we wrap up. Any questions? I know that, again, this was a very insightful session and trust that you found it worthwhile. And we do know for sure what the most important word is when it comes to loan requests, and that's repayment. I got that loud and clear. That was very interesting to hear. But any questions before we share some final points? Okay. Well, just I want to note, well, first, let me say thank you again to Shawana. Great um, presentation. And if you haven't already become a client, you can contact us. Uh, the email is noted there on the website or give us a call. But ultimately, to register or sign up to become a client, you will need to do so on that website, billbronzeville.com/SBDC. Um, and you will receive a recording of today's session along with the survey request. We ask for your feedback because we like to provide training that's truly relevant for you and the to help you to excel as a business owner. And we welcome any recommendations for future training sessions too on that survey. So remember, you'll get that and you should share any of those recommendations there. And I thank you for your time and attention. I'm going to stop recording for a moment.